Okay, everybody, thank you for joining. We can get this started. This week's Ask the Expert, our guest is Orion Protocol. We have Stefan, who is Director of Business Development and Operations at Orion. And the topic for today's discussion is understanding the different levels of crypto exchange security. Exchanges have been in the news quite a lot in the last week or two. So this is a very topical discussion, and I'm sure we'll have a lot to learn about crypto exchange security and Orion's approach to security and their decentralized liquidity aggregator. So, Stefan, if you just want to introduce yourself to the audience, that'd be great.
Yes, hi, Jesse. Thanks for the intro. So, as you said, I'm Stefan. I do business development and growth strategies at Orion, as well as operations, internal operations. So, I've been there for a year now, and basically, we're trying to always improve our products. And obviously, we're doing this Twitter space today to raise awareness of our offering, which we believe is really important in the grand scheme of things when we look at crypto exchange security and what's happening in the market with all these large centralized exchanges and indexes, and sometimes there's scary stuff out there. So we believe we've built a solution that makes crypto trading safe for everyone. And so, glad to be participating in this talk.
Yeah, thank you for coming on. And obviously, crypto exchanges are a fundamental part of the ecosystem. You need to be able to buy and trade your tokens and sell them when the time comes. So definitely critical infrastructure in crypto. I'm wondering, so obviously we've had centralized exchanges in the news in the last couple of weeks, but there are more than just centralized exchanges in crypto. Could you give an overview of the different types of exchanges that are out there in the space?
Sure. Well, like you said, there's the centralized exchanges are the bigger ones, like the ones that we know, the big names. That's where the big money is, the marketing is. That's where by far trading happens. So centralized exchanges are basically when you have to create an account on it and log in with your email, and they sort of act like a bank in the sense that you give them your assets, you trust them with your assets so that you're able to trade on their platform, sort of like typical stock trading platforms. So those are centralized exchanges. But we also have decentralized exchanges, which really mean that this is a completely new type of trading experience, of trading platforms. Well, new in the sense it's been a few years now, but basically you're able to trade assets in a trustless manner. So without having to give your assets to a third party, to a custodian, as we call it, you basically are able to trade straight from your wallet. It's almost as if you're carrying your cash on you, and you're able to trade it whenever you want without having to deposit it in a bank, let's say, or to trust someone else with your funds. So this is a very simplistic manner of looking at it, but of course there's like way many more different types of exchanges, but really the big categories here are centralized exchanges and decentralized exchanges. Now, decentralized exchanges are different in the sense that they're often more experimental. We have now like decentralized exchanges that have been operating for years and are very trusted in the community. But often you have like more like decentralized exchanges that appear, and basically because like it is easier to create new decks when there's already a previous decks that was created using libraries or open source code. So I mean, like that's that's a big difference here. Centralized, you trust someone else with your assets. Decentralized, you don't, and you're basically trading against a market that's like automatically created based on liquidity that other traders are inputting on that exchange. Like I said, there's reputation. When you look at different types of exchanges, one way of classifying it is the ones that are trusted and the ones that are experimental for sure. So when you think of Binance and KuCoin, OKX, those are very trusted centralized exchanges, as trusted as it goes in the crypto space. And then when you look at decentralized exchanges, you have the Uniswap, you have a PancakeSwap, you have a 1inch, which is a DEX aggregator, which basically means that they look for the best prices on other platforms, but they only do so by looking at decentralized exchanges. And then you can also, like, when comparing different crypto exchanges, you can look at security. So centralized exchanges will have different types of security measures. Typically, there will there'll be more like traditional security measures in the sense that you have a login, you have a password, you need to have a very strong password. Maybe they have a two-factor authentication. They have dedicated teams to make sure that there's no fraud. It's really they act more like big fintech companies, more like almost like traditional fintech companies, whereas decentralized exchanges operate completely differently. They use what we call smart contracts. Like it's basically you basically have to trust that the code that is available to the public, these smart contracts are safe and safe to use. And yeah, when I said earlier that some DEXs have been used for years and are very trustworthy. This is what I mean. Like the whole community is able to look at the code and check, and all sorts of people can look at it and make their own analysis and then make public statements about it. So this is the way that decentralized crypto exchanges or DEXs take us like approach the security aspect of operating a trading platform.
Yeah, I think that's a great overview of the major differences between centralized exchanges, which do operate, as you said, like large fintech companies or almost banks, crypto banks sometimes, in that you're depositing your assets and having a claim on those that you then withdraw. Whereas decentralized exchanges, very new in the grand scheme of things, all built enabled by blockchain technology and smart contracts, which gives a fundamentally different security model there. And that's something we'll get into a little more later. So what are the advantages of centralized versus decentralized exchanges? Why might someone choose to trade on one versus the other?
There's a few advantages and like pros and cons. I would say definitely at first the centralized exchanges were easier to use. They're more friendly to use. You log in the same manner that you typically log in on a different website. Ease of use, and then versus decentralized exchanges where you need to either have your own private key, hold your own private key, have your own wallet. It's not always as easy to use. Often they're less easy to understand because they're so experimental. Centralized exchanges, on the other hand, so they're easier to use, but also you have to trust them. So they act like a bank, so you really have to hope that they're going to do the right thing. And we've seen that centralized exchanges or apps like Celsius or FTX, obviously, you can trust them until you can't really, and it's very hard to see. Like sometimes there's a lot of opacity related to centralized exchanges. So yes, some of them have been operating for years, but you just don't know for sure. As a user, you really don't know for sure if you can trust that entity to hold your assets on a longer term period. Whereas with decentralized exchanges, you have the ease of mind that if you trade there and then you get back your assets in your wallet and they stay there, you have ownership of your assets. So whatever happens to the decentralized exchange really won't affect you. You have ownership of your assets. If a centralized exchange goes down and it becomes bankrupt, it's extremely hard. It takes years to get your money back often. And we've seen it with Celsius, that it's a long process to retrieve your assets. If even it is a possibility that you'll have access to your token. So it's a very big deal. Like safety, like a crypto exchange security and safety, it's a big deal in the sense that it has affected a lot of people. I want to say millions of dollars, but really it's billions of dollars that have been locked or frozen in different types of centralized exchanges for the most part. So it is a big deal. And then pros and cons, I would say like some centralized exchanges don't operate in all jurisdictions. So they might not operate in the US or in Canada. And so, but on the flip side of things, they have, customer service, and they're able to, like when they do operate in your jurisdiction, they have customer service, marketing would maybe better, and they're typically more user facing, versus decentralized exchanges, which are available pretty much like anywhere on the planet for the most part, and but they don't typically have customer service. So if you have questions or if you lose your funds, it's easier to make mistakes on decentralized exchanges if you maybe don't know what you're doing, or decentralized exchanges and managing your own wallets versus centralized exchange. You won't really lose your funds by losing your private key on a centralized exchange. It's safer to use for the average user, But in the grand scheme of things, it might not be the safest option. Um, if you really you're putting all your assets in, like you're trusting one company to hold all your assets, that might not be the safest thing here.
For sure, I think that's a good breakdown of the different risks with each type of exchange, centralized versus decentralized. If you lose your password on a centralized exchange, you can generally go through customer service to regain access to your account. If you lose the private key that secures the wallet that you use to trade on a decentralized exchange, you're out of luck, basically. So a lot of that security falls back on the user in decentralized exchanges, which is great for some people and not so great for other people. So you
One
mentioned,
thing, sorry,
yeah,
just one thing before we move on. Prices. Prices are often much better on centralized exchanges, and that's a big component here. Like prices on centralized exchanges, if you're especially if trading like large orders, they'll be way better and way more competitive than decentralized exchanges. There's multiple reasons for this, but the big picture here is most of the trades happen on centralized exchanges, so the best prices are on those exchanges. And decentralized exchanges, they have good prices, but often, especially if you're trading large orders, you won't get the most bang for your buck. And so maybe just to recap here, like what Orion provides, if you allow me, we've really tried to build Orion as the best of both worlds, the best of centralized exchanges with the best of decentralized exchanges without the cons of both. So, well, basically on Orion, what you're able to do is trade on these large exchanges like Binance, KuCoin, OKX, access those best prices without trusting them with your assets. So with the benefits of a decentralized exchange and holding your own assets in your own wallet, you're able to like just go on Orion, plug your wallet, and then still have access to Binance and KuCoin's order books and trade there straight from your wallet without performing, without creating an account on their platform, without sending them your own assets. It's just very easy to use. You plug and trade. So it's the best of both, really.
so you get the access to those major exchanges liquidity without necessarily having to adopt the centralized exchange security model. Can you speak a little bit about, so obviously this is a combined approach where you've got dexes and centralized exchanges. How does that influence your approach to security? How do you secure this combination of liquidity sources?
There's a few aspects here. So when we give access to a centralized exchange, what really happens is that the user performs an atomic swap with our own brokers. Brokers, basically what they do is they hold funds on centralized exchanges and on our decentralized smart contracts. So they'll hold Bitcoin on Binance and they'll hold Bitcoin on Orion smart contracts. And when a user wants to trade on Binance, what they're really doing is sending an order to our Orion broker, and then the broker performs the trade on Binance on the user's behalf and releases right away the funds through the smart contracts. So by using smart contract, and so that's one concept. The other concept is that when the user trades with the broker, our broker, they use what we call atomic swaps. This technology is quite complex, but basically what it means is that the user doesn't give the broker access to their funds until the user receives really the funds that they've purchased. So the user comes to our platform, they're guaranteed by code really that their assets are safe until they have access to the assets that they've just bought. So if you're going on Orion, you have USDT, you want to buy Bitcoin, you won't be giving your USDT until you have like on the back end, until you have like a full guarantee that the Bitcoin that you purchase is now yours. And so this is what we call an atomic swap. So we use atomic swap so that users can trust that they won't send out funds without receiving the funds they want. We use brokers, which are like basically our mechanism to be able to tap into centralized exchange liquidity without requesting users to expose themselves to the centralized exchanges risks. And brokers put up collateral. So a bit like proof of stake networks, when they put up collateral, they put it up in case of errors or misbehavior potentially. So it acts like stack slashing when you have the proof of stake networks. So I would say like these two concepts is what we do to ensure that the security of the transaction on our platform is very high. So users still have access to centralized exchange liquidity without using their those securiity measures, What they do instead, they trust our smart contracts, our atomic swaps. Smart contracts, everything is public, and the same way that you would trust a decentralized exchange, you trust Orion. The only big difference here is that our prices will be much better than competitors like Uniswap, simply because we purchase these assets straight from Binance and KuCoin.
So,
And
is there
then
any point at which the brokers or the platform itself takes custody of a user's assets that they're using to execute the trade, or is this fully non-custodial?
it's fully non-custodial. So our brokers, they have their assets in the smart contracts and in on centralized exchanges. But when a user, like this is what I mean, when a user performs a trade on Orion, what they do is they don't give custody of their funds until they have custody of the funds they just purchased. So you don't release your funds until the broker gives you the Bitcoin that you just purchased, for example. So and the whole time is like smart contracts. We don't hold funds, users funds, like they're always available in our Orion smart contracts, which can be used whether Orion or not is down or not. So these smart contracts are operating on Ethereum, on the BNB chain and other networks. So they're just like other smart contracts, obviously a bit different, but the idea here is that whatever happens to Orion, whatever happens to like we don't hold your funds. Like they're not, we don't hold them. They're always available on the blockchain.
Got it. Yeah, I think that will reassure a lot of users who don't necessarily want to give up custody of their funds. So, could you explain some of the security measures in place to protect both users and I guess the brokers as well? That's an interesting one. How are they protected from the different risks in this model?
Well, that's a good question. The brokers obviously are prone to the centralized exchanges risk. So they have their funds on Binance and KuCoin, and they have their own funds the same way that a typical user would have their funds on Binance. So the broker here really takes on the risk of having their funds in the third party's hands, let's say. So this really removes the risk on behalf of the user. Now, sorry, the question was about security measures to protect this. Well, obviously, we do a lot of testing internally. We do internal, external audits of our code. Our code, a lot like the smart contracts that we have are obviously public, but a lot of the code is not open source, and for good reason. Like it's easier to manage. It also is very proprietary. No one else has this technology. So yeah, I mean, internal audits, external audits, the core concepts, like the mechanisms that on which Orion operates, really are the biggest factors here in terms of security. Like users, we don't hold users' funds. So what risk would we have like if we go bankrupt, the user has access to their funds. If something happens to the platform, our UI UX, the users still have access to their funds. It's all on smart contracts. Whenever a user trades, they only send their assets once they have like formal guarantee, like by code, that they will receive like the Bitcoin that they just purchased. So there's a lot of concepts here that make sure that security risks that exist on other platforms just don't exist on Orion.
Got it. That makes a lot of sense. And how can so obviously with all these different sources of liquidity, decentralized exchanges, centralized exchanges, how does Orion Protocol arrive at its price determination for the end user? How are they getting the best price, and how is that aggregated from all the different liquidity sources?
Well, that's the backend technology, the proprietary technology that we've built. We call it the Orion aggregator. Without going into the very technical details here, like basically all we do is we have our own price feeds where we access the APIs from centralized exchanges, which really give us access to their price feed. So Binance has, the last price that you see on Binance, we have that information. Then we have the last price on KuCoin and OKX, so we're able to basically really compare those prices and offer the best price to our users. When people go on our platform, you can actually see like the Binance order book on our platform, along with KuCoin's order book and other exchanges order books. So it's visible. You can actually see like the actual order books there. We just simply combine them together. What we do very different than any competitor really is that we also take into consideration DEX's AMM. So DEXs don't really operate the same way um, as centralized exchanges. So they use what we call an automated market maker. Basically, like without going too much into details, we're able to take that concept and transform it to create an order book format, which can really merge seamlessly with the order book format of centralized exchanges. So on our platform, you'll see like Binance, PancakeSwap, Uniswap, all mixed together in one order book seamlessly. So you can trust us that the price that is the best, and the reason why it has to be the best is because otherwise, like the brokers would lose money if our price was not as advertised on the platform. Well, the broker would have to like give out like would have to buy tokens at a higher price and then give them at a lower price to the user. It wouldn't really make sense. So our price is very accurate, very fast. It's much faster than competitors like 1inch or Uniswap. You go on our platform, the price updates quicker, and basically because it's connected to Binance and KuCoin, which are way more efficient than DEX's price feeds.
Got it. So, and there's like the market regulation, arbitrage, and everything, making sure that the price that the end user gets is a good one for the broker and a good one for the user, keeping everything pretty efficient. So, you're obviously building something pretty complex and pretty new here. Can you describe any security challenges that Orion Protocol has faced and how you've addressed those challenges?
Sure, yeah. Well, actually, a few months ago, like maybe 6 months ago in February, we had a small exploit on one of our smart contracts. So it was, first of all, no user funds were lost. Like didn't affect any user. It wasn't made a big deal simply because there's by design there's not a lot of TVL on Orion. By design, we don't hold user funds, and by design, like this really affected an experimental broker that was using one of our smart contracts that had just been updated a few weeks before. So but it was still like an exploit, and we've addressed it on Twitter, and everything could be seen on chain. And so that's what I was talking about before of having that transparency of a DEX without having the opacity of a centralized exchange. This is what really makes us different and better. This is what we believe we have a product here and a solution that can be very compelling for users because centralized exchanges, if there's anything fishy that happens, it's very opaque and no one learns about it until it blows up, like FTX, like Celsius. For DEXs, when something happens, it can be very catastrophic. So it has happened to DEXs where hundreds of millions of dollars were lost due to exploits. And this is because these exchanges really have to lock up a lot of liquidity. They have to ask a lot of retail users and liquidity providers to trust them and to put liquidity on their platform. We don't have that. So we don't have we have the transparency of a DEX in the sense that we use smart contracts and it's easy to see. Not that it's easy to see, you still need some technical knowledge, but we have that transparency. Now for that exploit, how we address it, it affected that broker, it affected some company funds. For now, our broker system is designed to be public, but it has remained private just because we take security and safety so seriously. So it was like what we realized, like some part of the code was maybe not built in house. So one thing that we've changed really is that all the code that we build now, we really make sure to develop the code in house, and it's easy sometimes. In a lot of projects, we realize a lot of projects use like third-party libraries. It goes faster, but in our case, like we've learned this lesson. So, for example, Uniswap v3 is a very known is Uniswap's latest AMM code and the concept. What we've done is we've built our own in-house version. So we're building documentation for it now. It's inspired by Uniswap v3, but it's different, and we believe it's better. So that's a spoiler, by the way. I shouldn't have said that, but it's something we've been working on. So obviously our technology is proprietary, but really when you develop Web3 products, there's so many you can do forks of networks and things like this. So it's very important to always be 100% confident in your own code that you've developed in-house, and that's what we do. Like we have the same dev team pretty much as 2-3 years ago. There's a lot of trust. So and one concept I mentioned earlier is that we don't have a lot of liquidity to steal from in the first place. Like we don't hold users' funds, and we don't have big liquidity providers who lock up hundreds of millions of dollars on our protocol. So that's why we say that Orion is a TVL light protocol, because really all we need is enough liquidity on our protocol to connect trades to the big liquidity providers. So we just need enough. So say there's like $1 million of trade happening on a single day on our platform. We don't need to have like $1 million worth of liquidity on our platform. Like really, what we need is to have enough liquidity so that if someone performs a trade, we're able to make the trade on Binance and right away distribute the funds to the user on a smart contract. We don't need to create a liquidity pool because we're accessing liquidity pools, or we're accessing centralized exchanges order books. So we don't have a lot of liquidity on our protocol. So by design, it makes it safer than other dexes, and since we have transparency, we believe we can be safer in some ways than centralized exchanges. And of course, audits are important, so we're still doing a full audit of all of our smart contracts. A lot of new smart contracts have been developed, so but we're really doing a full audit of all of them right now.
That's great, yeah, and I think your users and the community, the broader community, will appreciate the transparency that you've gone into with the exploit that you suffered back in February, as you mentioned, and the steps you've taken since then, and not holding a lot of liquidity, not requiring brokers or users to be part of liquidity pools, really like minimizes the attack vectors and the exposure to potential exploits, which at the end of the day protects users. So you mentioned developing a lot of code in-house and audits and just really making sure that your code does what it's intended to do. So audits are obviously a critical part of that. What other approaches to security do you have? Obviously, building newer protocols is going to come with new challenges. Just how do you think about that broadly?
Well, yeah, if there are always new protocols, but also like even the old protocols are always updating. So as soon as there is an update, say on Ethereum or an update on MetaMask, we're like, this is one of the things we do first is make sure that all our code respects that new update. And so it's basically updating the code. It's like updating the firmware of your hardware wallet. We just need to stay aware of all these new code pushes that happen. So, but I mean, aside from the fact that our code, we do a lot of internal testing, external audits. The code is itself like a big portion of the code that doesn't affect users is private. The smart contracts are public. They have to be. We have our Git book. I mean, we're very we've definitely learned a lot from that lesson, and more protective and more taking bigger precautions maybe that we weren't before. Even, I mean, not that we weren't, but it's like it's one of these things that you can't ever be 100% prepared for.
For
And yeah,
sure,
like
yeah,
there's also
stepping.
like all the concepts I mentioned before, like that by design. Orion is a safe place to trade by design. We don't hold funds by design. We don't, the brokers have their funds on centralized exchanges, but that's like that's good for us in the sense that it takes off that risk from users. Like there's a lot of concepts and mechanisms that by design make Orion safe.
For sure. And so it sounds like the brokers are taking on different risks to the users, sort of, taking on the risk so that the user is protected. What's the incentive there for the brokers? How are they incentivized to carry out that function?
I mean, we have fees that we share with the brokers. It's very simple. So when you trade on Uniswap, there is a fee. Our fee is pretty much the same as Uniswap. We're revising those fees right now to update them, to make them competitive, make sure they remain competitive. But basically, when you trade on Uniswap, you have a fee that you pay liquidity providers. So those are the people that have put in hundreds of millions of dollars cumulative into Uniswap's protocol to make sure that Uniswap has a market to offer traders. So, but the fees that they use are reward LPs. Now, what our fees, we don't need to pay if we route a trade on Binance or we route it to Uniswap, we don't. It's the cost of doing so is very low. We don't need to pay LPs. Basically, we reward and we incentivize our brokers to perform that job. Yeah, but it is a less expensive operation. It's more cost effective for sure.
Got it. Yeah, that makes a lot of sense. Um, Probably have time for some audience questions related to exchanges, related to Orion, related to security. So if anyone wants to raise their hand and jump in with a relevant question that Stefan can answer, that we've got time for that. Are there any other topics you'd like to cover, Stefan, before we get to audience questions? Any other remarks on Orion's approach to security, on security in the exchange space generally?
Yeah, I mean, just in general, like one tip is when you're using smart contracts or decentralized exchanges, often there's like when you sign a transaction using your wallet, you allow that smart contract to have unlimited access to your funds. So this is pretty standard now. There's new ways now that you can limit this depending if the smart contract has been updated or the product has been updated with the new features that are out now. But often, you're giving unlimited access to your funds. So there is this thing where you can revoke that access, and it's not often clear. But there are tools out there to revoke access. So if you're using a lot of different indexes, a lot of different Web3 products, decentralized products, it might be good sometimes like to go on these two. I think there's one called revoke.cash. Or like there's different ones out there to revoke the access that you gave these smart contracts. And so of course we use this also if anyone wants to use Orion and then just be 100, like even safer than simply using Orion. You can always revoke the access that you give Orion. So that's an option. But yeah, it's just a lot of people don't know about this, so I like to mention it sometimes.
Yeah, that's a great tip, and just general good best practice for users of decentralized exchanges, of decentralized protocols, to go to one of those tools you mentioned. Revoke.cash, I think. Etherscan has their own tool. There are plenty out there that all do the same thing, just to review the token approvals that you've given and revoke any that you're not using. Really is a great way of protecting your wallet. Doesn't look like we have any audience questions, so I guess you've covered everything pretty comprehensively. I think this is a really interesting approach to liquidity, to getting the best price for users, and it's great to hear that you're doing it in a non-custodial way. I think that's what a lot of users are looking for when they use decentralized exchanges, but then they also get the benefits of the liquidity of these larger exchanges where a lot of money flows. We do have an audience question, so I'll bring DGen up. What's your question, DGen? Just want to unmute yourself.
Can you hear me now?
We got you.
Awesome. Cool. Okay. Yeah. So I do have a question. So my question pertains to like anti-money laundering sanctions and compliance type deal. I know with central exchanges, they have to deal with this where, law enforcement will sometimes ask them to freeze certain funds because they're involved in some type of crime. There's also sanctions that they have to comply with for anti-money laundering efforts. Decentralized services are a little more hit and miss on whether they comply. And you guys are kind of like an interesting mix of decentralized and centralized services. So where does Orion stand? Do you guys actually do have like an AML requirement to comply with? What is the process, et cetera, et cetera?
That's a very good question, actually. It's obviously a topic that's been black and gray. Gray in the decentralized world. But in terms of centralized exchange, like our brokers perform full KYC on these exchanges. So that's the first thing. We're able to open up the liquidity from centralized exchanges through their APIs because we also do the KYC on their platform. So in the sense, we respect the centralized exchanges requirements. That being said, like it's true that for a lot of dexes like Uniswap and all that, like there's a lot of new solutions that exist on the market to make decentralized products still follow AML and like sanctions and all these things. We've been approached by a few different solutions. We're still in talks with some of them. Some of them are very they resemble each other very much. So it's a matter of picking which solution will be best, because we believe that we saw what happened with Tornado Cash, for example, like and DeFi products that start respecting the law a bit more, and they have to if they want to keep operating. So we're aware of all these challenges. Obviously, we've developed our product faster than regulation has come. There's still we're still not there. Well, the approach we're taking is definitely to look up to the leaders in the decentralized trading space. So we're looking at what 1inch or Uniswap will be doing, but in parallel, we've been in talk with there's like two big solution providers that are also in talks with all these big dexes to really understand what our requirements are. So as of now, users go on our platform and they don't have to create an account of any sort to access centralized liquidity. But we don't believe that dexes won't exist. So when you go on Uniswap, you don't need KYC because of you don't need to respect a centralized exchanges requirements, but you're still able to trade on this public market. Really, we believe this will keep happening, but it will not look. It might not look like exactly the same way as it looks right now. But at its core, Orion will always look to provide the best of both worlds. So the best prices, wherever they come from, probably centralized exchanges, because we still believe in those, although a lot of people don't like them. Like, we still believe centralized exchanges are here to stay and will grow compared to will continue to grow. DeFi will continue to grow as well. It's not an easy question to answer without anything public that we're ready to talk about, but yeah, for now we've been looking up to the leaders in the space, as well as talking to different solutions for that.
Well, thank you for that answer. That's good to hear. I mean, at least I'm glad to hear that you guys are strongly considering it and take it seriously. I do think that exchanges like yours, if you guys could really deter the bad guys from stealing by knowing that their funds will be frozen, that'll be a key to improving Web3 security. So thanks for that answer.
Yeah, no, exactly. There are solutions out there that as soon as a big hack happens, all the connected smart contracts are aware of that information and then shut down that bad actor, for example. So yeah, we don't want to be the route that the Silk Road or whatever the route that bad actors start taking. So we haven't seen anything suspicious so far, but yeah, we're aware of that risk.
Yeah, really great question. Thank you, Degen. We have a question from John Dog. I will bring you up.
And thanks for your question, Degen. Yeah, that was a good one.
Thank you.
Okay, John Dog, if you want to unmute yourself and ask your question about Orion or centralized exchanges and security. Just unmute yourself if you have your... Oh, no question. Okay, no problem. Yeah, I think we've covered a lot of ground here, Stefan. That last question about the regulatory environment is obviously an ongoing one to be worked out, and yeah, we've seen a lot of, in the decentralized space, bad actors do try and move their funds through different exchanges, and it's good to hear that you're taking a proactive approach to that and monitoring for any sort of suspicious activity. Guess we're just about ready to wrap this up. Are there any final words you'd like to leave the audience with?
Yeah, well, first of all, thanks for hosting this. It's not always an easy topic, and we really believe that the space offers a lot, and unfortunately there's a lot of still security problems out there, safety. Some users don't trust platforms, centralized exchanges. There's a lot that has happened, and that's also probably a big reason why it's not mainstream yet. People that aren't in crypto hear the news about Celsius or FTX and they're scared of crypto. So we really want to make crypto trading safer and trustworthy, and so while still providing benefits that centralized exchanges offer and mitigating the risks from decentralized exchanges. So yeah, we've built this platform. We just want to see this space grow. We believe in our product, and so if there's any questions, we're always happy to answer them either on our Telegram or just follow us and try our product. Let us know what you think. We're revamping our whole website now to make this all more clear. But yeah, glad to be here, and thanks a lot, Jesse, for hosting this.
No, thank you for coming on, Stefan. And yeah, you're right. A lot of these questions are not easy to answer, but the only way to answer them is by working through them. So thank you for your insights today, and hope everybody learned a lot. And we look forward to seeing Orion build the decentralized liquidity platform that will serve users into the future. So thanks, everybody. Look forward to seeing you next time.
Thanks, everyone. Thank you. Bye.